Welcome to Edison TV. I'm Katherine Thompson, Technology Analyst at Edison, and I'm here today with Nick Jefferies, CEO of discoverIE. discoverIE is a FTSE 250 designer and manufacturer of custom electronics for industrial applications. The group has a decentralised operating model and has over 25 businesses operating across 20 countries in Europe, North America and Asia. So welcome, Nick.
Hi, Katherine.
To kick off, could you give us an update on the trading environment for the company? I know orders have been depressed recently as some of your customers have been working down their inventory. Where do you think you are in that process?
Yeah, it's been a tricky year. The market has been destocking. Customers, that is, have been destocking following the post-COVID boom. 2 years ago, there was a shortage. 3 years ago, there was a severe shortage of electronics components and components generally, which led to customers stocking up to secure supply. That started to unwind a year ago, and we're now in the final stages of that destocking cycle. So customers have reduced their order intake or order placements upon component suppliers such as ourselves, whilst they burn off the inventory that they built up. In some areas, in some sectors, we've come through the end of that, and certain areas are back into growth. Other areas, we're probably going to see the end of it in the next sort of couple or 3 months or so. So it's been a 12-month destocking that we're approaching the end of.
And that destocking has obviously weighed on your organic growth, revenue growth rate in recent quarters. To put that in context, do you think you could talk us about your track record of organic growth and also how you see that playing out in the medium term?
Yeah, so over the last 10 years, we've grown about 6% CAGR organically. It's come down a little bit over the last 5 years with this destocking that I've just referred to, but we're still, over an extended period, well above 5% organic growth CAGR. So we've got a good track record of providing or generating decent through-cycle organic growth, albeit not as high as we would like to get to. We think there's scope to do more, but our track record is of that kind of ilk. And what we've been seeing just more recently is that the organic growth figure has come down because mathematically, for customers to burn off their inventory, they need to take less inventory from us. So where some of our customers are still growing quite well in their end markets that they're selling through to, they're taking much less inventory in from us in the intervening period. And that obviously has impacted our short-term organic growth. But sure as eggs are eggs, that will finish when they have adjusted their inventory, then their demand upon us will bounce back up to their pull-through level. And that's what we're fully expecting to happen over the next sort of 3-6 months.
And M&A has been a key part of discoverIE's growth strategy for some time now. What are you seeing in your M&A pipeline, and how do you expect to fund any future acquisitions?
So M&A, as you know, has always been a very large part of what we do. The whole business now that we have is built on acquisitions. We acquire high-quality niche businesses that make customized electronics for high-quality industrial-type customers. Nowadays, we have a team of 5 people running our M&A activity. Some of the people in that team are engineers, and those engineers work with our opcos to identify and generate our own acquisition targets and opportunities. And the result of that now is that most of our acquisitions are generated in-house through our own outreach programs. And we therefore have quite a substantial pipeline of businesses that we're in various stages of discussion with. We made an acquisition in January of Burster, a German specialist sensor business, and we have sort of others that are in the pipeline and ongoing now. In terms of firepower, we have currently around about 35 million of debt capacity for acquisitions over the next few months, which will probably take us up to about the September half year. And we fully expect to utilise that.
The stock's currently trading on a 5-year low when looking at forward PE, and that's despite very resilient profit generation through the downturn. What are your thoughts on the disconnect between your financial performance and the valuation?
Yeah, so in sort of the sort of conventional world of industrial manufacturing, when sales come off, then that drop off in revenue drops straight through a fixed cost base through to profitability. So you get an amplified drop off in profitability. That's what happens in many industrial manufacturing businesses. That doesn't happen in our business because we have a flexible manufacturing capacity where we can ebb, or where we can modulate or demodulate the cost base according to the demand levels, which means it protects our profit drop through. And the net result of that is that through the cycle, our operating profits have been very steadily actually grown over 16 years. And therefore we've reduced any kind of cyclicality or been able to mitigate any cyclicality that we saw at the top line. So we have very resilient profits and earnings growth as a result of that, notwithstanding a bit of the top line cyclicality that we can't avoid.
So with the return of organic growth at some point, hopefully in the near term, we should really start to see things picking up again.
Yeah. So yes, exactly. So as the cycle turns, as it inevitably will, and money supply, the global money supply data is kind of pointing in that direction. It's positive money supply data, and that's a pre-indicator of global industrial output, demand and output. Then we will see the order and the sales levels sort of recover to previous kind of levels, and then we'll grow onwards from there. And for us, the biggest driver of our organic growth is design wins. Our design wins are very, very strong. And what we've seen over the last year or so is that as the design wins have built up very strongly, a lot of them haven't converted into revenue yet, because customers have been clearing out their previous inventories. As all that comes to an end, then those new designs will convert into revenue, and that will drive our organic growth. So we fully expect that sort of a bounce back to occur.
Great. Nick, thanks for coming in.
Thanks, Katherine.